trillion rupiah for reconstruction after deadly floods. Bill Gates says AI could help Africa become a significant net food exporter. And Trump announces the involvement in merger between Netflix and Warner Brothers. And welcome to our economic bulletin. We start off with Europe, where Slovak policymaker Peter Kazimir has stated that the European Central Bank sees no need to change interest rates for several months and should remain alert to upside inflation risks, such as slower wage moderation and a weaker than expected impact from a stronger euro. He noted that the economy is broadly on track, but recent upside surprises require vigilance. Kazimir warned that the exchange rate's effect on inflation may be limited, with firms not fully passing currency movements into prices. Credit Reform Agency has reported that German corporate insolvencies are set to hit their highest level in more than a decade, with about 23,900 companies expected to file for bankruptcy in 2025, up an 8.3% from 2024 and the highest since 2014. Small firms remain the most vulnerable, with micro enterprises of up to 10 employees accounting for 81.6% of cases. Financial losses are projected at around 57 billion euros in 2025, down from 59.1 billion euros last year, with average losses per case exceeding 2 million euros. And about 285,000 employees are expected to be affected, slightly fewer than the 291,000 impacted in 2024. A key survey by the KPMG and the Recruitment and Employment Confederation has shown that the UK hiring remained weak in November due to uncertainty ahead of the autumn budget. Permanent placements fell for a 14-month, and temporary hiring contracted as firms awaited Chancellor Rachel Reeves's fiscal plans. Though the eventual budget avoided major employer tax hikes, caution prevailed, contributing to cooling labor market. The findings align with other recent surveys and official data showing a rise in unemployment to a 5%. However, starting salaries for new permanent roles rose at the fastest pace in 5 months as firms competed for skilled candidates. In Asia, the Organization for Economic Cooperation and Development, the OECD, has raised its forecast for China's economic growth in 2025 from 4.9% to a 5% in its lowest economic outlook report. And the report highlighted China's expansionary fiscal policy, including measures to support household incomes and stimulate consumption, such as trade-in programs for vehicles and home appliances. Head of the OECD Beijing office, Tamas Hajba, stated that these efforts to accelerate equipment upgrades and consumer goods trade-ins have effectively boosted consumption and strengthened export-driven manufacturing. He added that despite global uncertainties, China's economy has remained resilient and continued to transform in 2025. China's General Administration of Customs has reported that total goods trade reached a 41.21 trillion yuan in the first 11 months of 2025, up to a 3.6% year-on-year. and the same growth rate recorded in the first 10 months. Exports rose a 6.2% to 24.46 trillion yuan, while imports inched up an 0.2% to a 16.75 trillion yuan. Trade with Belt and Road partner countries climbed a 6% to a 21.33 trillion yuan, accounting for a 51.8% of China's total trade. In November alone, total imports and exports increased a 4.1% year-on-year to a 3.9 trillion yuan, with exports up a 5.7% to a 2.35 trillion yuan and imports up a 1.7% to a 1.55 trillion yuan. The Cabinet Office has reported that Japan's economy contracted faster than initially estimated in the 3 months through September, primarily due to new data dragging down capital spending figures, though economists say the blip is not enough to sway the central bank. Data showed that gross domestic product shrank an annualized 2.3% rather than a 1.8%, the quickest rate since the third quarter of 2023. And on a quarter-on-quarter basis, the GDP contracted an 0.6%, compared with an initial reading of an 0.4%. Private consumption inched up an 0.2% in the third quarter. Meanwhile, the capital expenditure component of GDP fell an 0.2%. And still in Asia, the senior government officials have announced that Indonesia's Sumatra Island will need 51.82 trillion rupiah for reconstruction and recovery after the recent deadly floods. And the head of the National Disaster Mitigation Agency, Suharyanto, stated that the required funding across Aceh, North Sumatra, and West Sumatra may rise as damage assessments continue. He noted that Aceh province faces the highest costs at a 25.41 trillion rupiah, followed by North Sumatra at a 12.88 trillion rupiah and West Sumatra at a 13.52 trillion rupiah. Suharyanto added that in the next phase, affected residents will be relocated to permanent homes to be built by the Housing Ministry. And moving on to Africa, where Microsoft founder Bill Gates has stated that artificial intelligence could help Africa become a significant net food exporter. And speaking at the Doha Forum in Qatar, the U.S. businessman predicted that AI tools could achieve a great vision for the continent. He suggested AI could provide free, cloud-based advice to farmers on improving soil, seeds, and livestock. Gates proposed funding these services through partnerships with wealthy nations and foundations, framing it as a key step towards solving long-standing development challenges. U.S. President Donald Trump has announced that he will be involved in deciding whether a proposed $72 billion merger between Netflix and Warner Brothers should proceed, citing potential market concentration concerns. And Trump told reporters upon arriving at the Kennedy Center that he will be involved in that decision. While he did not state whether he favors the deal, he noted that the combined entity could hold significant market power, suggesting it could be problematic. The president did not state a clear position on its approval, and the deal is already expected to face significant antitrust scrutiny from regulators.
They have a very big market share. Did he make any guarantees to you about the merger if they do merge?
No, not at all. He came up. He was in the Oval Office last week. I have a lot of respect for him. He's a great
And Paramount Skydance has launched a hostile $108.4 billion bid for Warner Brothers and Discovery in a final push to outmaneuver Netflix and form a media powerhouse capable of challenging the streaming leader. Under the proposal, Paramount would bypass WBD's management and go directly to shareholders with an all-cash offer of $30 per share. And what began as a fact-finding mission for Netflix has culminated in one of the biggest media deals of the past decade, a move set to reshape the global entertainment landscape. And our colleague Hani Saif tells us more.
Lights on, cameras rolling, and Hollywood holds its breath. A blockbuster deal is threatening to rewrite the script of the global entertainment industry. The American film industry is facing one of the biggest shakeups in its history after streaming giant Netflix announced a deal to acquire Warner Brothers and HBO Max for $83 billion. Move analysts are calling a seismic plot twist set to reshape Hollywood for decades. Now, the deal, expected to close by the third quarter of 2026, has already triggered panic behind the scenes, and the backlash rolling faster than the end credits. Hollywood unions are pushing back hard. The Writers Guild of America is calling for the deal to be blocked immediately, warning that merging the world's biggest streaming platform with one of the largest studios is exactly what antitrust laws were written to stop. Their fears read like a horror script. Job losses, lower wages, higher subscription prices, less creative diversity. And the tension doesn't stop there. US regulators are preparing for a deep antitrust review amid concerns that Netflix could gain too much control over the global entertainment storyline. Netflix, however, insists this isn't a villain arc. Co-CEO Ted Sarandos says the deal is pro-innovation, pro-workers and pro-audience, promising that HBO will largely remain independent and Warner Brothers will keep producing for other platforms. But in Hollywood, this narrative is risky business. Cinema owners are sounding the alarm, calling the deal an unprecedented threat to 30,000 US movie theaters, as fears grow that the big screen could slowly fade to black. Netflix says theaters aren't going anywhere, but admits films may hit streaming faster than ever before. And here's the cliffhanger. If regulators reject the deal, Netflix faces a $5.8 billion breakup bill. So don't drop the popcorn just yet. As for Warner Brothers' future, still very much unwritten. Tens of thousands of industry jobs already lost since 2020 from the pandemic and strikes to cost cutting and AI. Many fear this merger could fast forward a new era of consolidation at the expense of creativity and careers. So now it's a battle of narratives. Netflix's ambition to become the ultimate entertainment powerhouse versus growing warnings of dangerous concentration of power. Hollywood is reaching its crescendo, and the sequel is already in motion, one that could change cinema and streaming forever.
Thank you, Hani. And now for further analysis, we are joined from Washington by the chairman of Links Investment Advisory, Mr. Peter Tanos. Welcome, sir, and thank you for joining me here today. Sir, can you tell us, how does the recent Warner Brothers and Netflix deal reshape the competitive landscape of the streaming and entertainment industry, especially given Paramount's parallel moves in the market?
Thanks, Selma. It's nice to be with you again.
Thank you.
This is a massive deal, and the analysis we just heard a few minutes ago pretty much sums it up. To make it as simple as possible, the Netflix deal did have some antitrust issues that were very serious. Here's the summary. Netflix has over 300 million worldwide subscribers. You add HBO in this deal with about 120 million subscribers, and you have a massive influence on subscribing to whatever these streamers offer. And it puts them in a very, very difficult competitive advantage over everybody else on pricing, on content, and all of the rest of the things that go. So the deal now, the fact that Paramount is making a hostile all cash bid uh, for Warner changes the equation because they would come out as maybe number 3 and 5 streamers together, not the one and not the two top ones.
President Trump has announced his involvement in that deal. What implications do you think could this participation have on regulatory decisions and industry dynamics, do you think, Mr. Tanos?
Well, interestingly, I mean, the president made a comment that the Netflix deal, I mean, he made some very, very nice comments about Netflix CEO Ted Sarandos, but he also mentioned that the deal had problems. The problems it has are the ones we just talked about in terms of competitive. Now, the government's role is to ensure that mergers like this don't result in anti-competitive situations or a monopoly by one group over the others. So it's not unreasonable for the president to say that he'll have a voice in this.
In what ways might the Warner Brothers Netflix agreement maybe impact wages and working conditions for industry laborers, such as the production crews, the actors, and post-production stuff, do you think?
Yeah, good question, Selma. And in fact, it was an issue because you see what's happening in movie theaters today. Even the movies that are the highest rated and the ones that are about to be nominated for Academy Awards are getting very little action in terms of people going to the theaters to see them because they know that a few weeks later they're going to be able to watch them at home. And this is what the movie industry is really very concerned about. And the movie industry was much more worried about a merger with Netflix than it will be with a merger with Paramount, because it thinks that Paramount will produce more theatrical productions than the Netflix merger would.
In your opinion, do you think this consolidation between a major studio and a streaming giant potentially may lead to labor market shifts, do you think, including maybe job security and union negotiations?
Yeah, there'll always be a job security issue for some segments of the industry. But in my opinion, the movie making industry would be more favorable to the Paramount acquisition than it would be to the Netflix acquisition. Remember, there's another interesting side effect here. Netflix has a $5 billion breakup fee. If the deal doesn't go through, they're going to have to pay $5 billion if Paramount wins. So don't be surprised if there is a counter offer by Netflix. It's something to be watching in the next few days.
Well, Mr. Tanis, how might the smaller content producers and independent studios maybe, do you think they'd be affected by the dominance of major players like Warner Brothers, Netflix, and Paramount in this new deal?
Well, the smaller ones already are affected. You know, Netflix is pretty dominant with 300, with over 300 million subscribers. But then you have Disney. You have Disney. You have Paramount. You have HBO, and the others that also produce content. So there's plenty of business to go around here.
Mm-hmm. And in your opinion, what other broader economic impacts could arise in the entertainment sector from this deal, maybe particularly regarding labor demand, technological innovation, and content diversity?
Yeah, so the diversity issue is, I don't think, very much in danger because, as I mentioned, there are 4 or 5 streaming services. But if Netflix wins, the combination of Netflix and HBO produces over 400 million subscribers under one platform, potentially under one ownership, not necessarily one platform. And one could argue that that could create some issues in terms of diversity and different aspects of filmmaking. And the other issue, of course, as we already discussed, is the issue of theatrical viability. Well, will the theaters be able to stay alive if there is so much streaming content out there that is going directly into people's homes?
And if you can tell us, Mr. Tanas, from an industry regulatory perspective, what do you think are the challenges and opportunities does this deal present in balancing corporate growth with fair labor standards and competitive market health?
Yeah, well, Paramount argues that their deal is more consumer friendly. They also argue that it's a better deal for the shareholders of Warner because it's an all cash deal. The other thing that we didn't discuss is that the difference in the deals is that the Paramount deal includes buying all of Warner Brothers. Netflix is excluding their cable channels like CNN and Discovery and others, which would be spun off into a separate company, which is another issue about the future of cable news. But all in all, it appears that the Paramount deal would do less damage, if you want to look at it that way, to the industry than would the Netflix deal.
Okay. Well, Paramount's reaction to the deal, how might competitive pressures drive changes in employment practices, investment in labor, and approaches to content production across the industry over the next 3 to 5 years, maybe?
Yeah, well, that was the issue, in fact, with Netflix in terms of content. The combination of Netflix and HBO would basically produce a mammoth streaming service that could be arguably independent. I mean, Netflix has said that HBO would remain independent and would do their own programming, and Netflix would continue doing what it does, and it does it pretty well. So the competitive aspect is not as much of an issue as is the theatrical aspect and what the effect on movie theaters would be with one or the other combination.
And from Washington, that was the chairman of Links Investment Advisory, Mr. Peter Tanos. Thank you so much, sir, for your insights. And now we move to the latest developments in the MENA region. Egypt is hosting the third global conference of the FAO representatives from December 8th to the 10th, 2025, in the new capital under the theme Hand in Hand for Better Food and Future, with Prime Minister Mustafa Madbouli presiding. The conference launched FAO's Village initiative to preserve agriculture and food heritage under the museum and network, showcasing rural communities' role in protecting food traditions and local innovation. A documentary highlighted the initiative's impact. Attendees, including the Arab League Secretary General Ahmed Abul Ghait, the FAO Director General Q Dongyu, and the Egyptian ministers discussed strengthening global collaboration to advance sustainable food systems and achieve the 2030 SDGs. And the Arab League Secretary General Ahmed Abul Ghait has warned that food security has become one of the gravest challenges facing the Arab world, with the region experiencing one of the world's largest food gaps and relying on imports for over half its needs, reaching 90% in some countries. Speaking at the third regional conference of the Food and Agriculture Organization in Cairo, Abul Ghait highlighted unprecedented pressures on agriculture, water, and natural resources, calling for urgent and coordinated action. He pointed to severe water scarcity, conflict-driven hunger, and catastrophic situations in Yemen, Sudan, Somalia, and Gaza, where Israel's siege and destruction have devastated food systems. Abul Ghait urged unhindered humanitarian aid access, stronger Arab strategies, and deeper collaboration with the FAO to strengthen long-term food resilience across the region. And for his part, the Egyptian Prime Minister Mustafa Madbouli has praised Egypt's long-standing strategic partnership with the FAO and its role in advancing agricultural development, capacity building and regional food security. Madbouli emphasized Egypt's commitment to strengthening One FAO, enhancing collaboration across the UN agencies, supporting vulnerable communities and addressing challenges from climate change and economic disruptions. The Prime Minister further affirmed the country's backing for the FAO initiatives such as Hand in Hand, promoting sustainable agriculture, rural empowerment, and resilient food systems globally, including Gaza and Sudan. The Kremlin has stated that India would continue buying oil wherever it was profitable to do so in order to ensure its own economic interests. And the Kremlin spokesman Dmitry Peskov stated that India carries out foreign trade and buys energy resources wherever it finds it most advantageous. And oil prices fell on Monday as investors monitored ongoing talks to end the war in Ukraine and ahead of an unexpected U.S. Federal Reserve interest rate cut this week. Brent crude futures fell by 56 cents or an 0.9% to a $63.18 a barrel. Meanwhile, the U.S. West Texas Intermediate crude was at a $59.51, down 57 cents or 1%. And the Bank for International Settlements has warned that the simultaneous surge in gold and share prices, unseen in the past 50 years, could signal a potential bubble. The BIS economic advisor Hyun Song-shin noted that gold has behaved unusually this year. The BIS analysis found that 2025 marks the first time gold and the S&P 500 have shown explosive behavior together in 5 decades. It noted that gold ETFs have consistently traded above their net asset value, reflecting strong buying pressure and limited arbitrage opportunities. Shin added that the central bank purchases have firmly supported gold prices. And gold edged higher on Monday as investors grew more confident that the U.S. Federal Reserve will cut interest rates at its 2-day policy meeting this week, while a softer dollar added support. Spot gold rose an 0.3% to a $4,208.40 per ounce. The U.S. gold futures for February delivery fell an 0.1 to a $4,238 per ounce. The dollar index edged lower, lifting greenback-priced gold's appeal for overseas buyers. Silver was up an 0.1% at a $58.35 per ounce after hitting a record high of $59.32 on Friday. Platinum added an 0.9% to a $1,656.50, and palladium rose 1.3% to a $1,476. And global stock markets showed mixed results on Monday. In the U.S., and the Nasdaq declined an 0.17%, and the S&P 500 dipped an 0.32%, and the Dow Jones Industrial Average fell an 0.35%. In Europe, Germany's DAX inched up an 0.09%, while France's CAC 40 slipped an 0.19%, and Britain's FTSE 100 decreased an 0.27%. Across Asia, Japan's Nikkei 225 rose an 0.18%, and China's Shanghai Composite jumped an 0.54%, while Hong Kong's Hang Seng Index fell a 1.23%. And that brings us to the end of our economic bulletin, and here's what we have been covering. Indonesia needs 51.82 trillion rupiah for reconstruction after deadly floods. And Bill Gates says the AI could help Africa become a significant net food exporter. And Trump announces involvement in merger between Netflix and Warner Brothers. And this concludes our economic bulletin. Don't forget to follow Q News on YouTube, Facebook, X, Instagram, and TikTok at Q News EG to stay informed. And thank you for watching, and stay tuned for more updates on Q News.